Hey everyone, me Kevin here. In this video, sponsored by Moomoo, link down below, we gotta talk about Nancy Pelosi and what the heck she just bought. Everybody loves following Nancy Pelosi's trades because we all know she seems to have some sort of crazy insight. Her buys seem to be pretty dang well timed. And let's go ahead and take a look at some of these purchases and what they might be signaling to us. So all of the transactions here are options purchases. I'll go ahead and explain those. If you're confused with how some of these work, I'll do my best in this video to explain. But if you're looking for a deep dive on options or TA or fundamental analysis, check out the programs on building your wealth down below. The Stocks and Psychology of Money program would be great for you with a coupon code expiring January 1st. That way you can take advantage of some tax benefits if you jump in the next couple days, writing those off as an education expense. Check with your CPA. Okay, folks, let's take a look at this. So we've got Google. We've got a Google call options here for September of 2022. So September 16th of 2022. Now, I find this really interesting because September is past that first half of 2022 when we're still expecting some inflationary rockiness. See, by the end of 2022, we're expecting inflation to go down. Market is at least expecting inflation to go down to 2.8%, Fed down to 2.5%. We look at inflation now, though, it's at 6.9% in December. We've got the CPI read coming up in a couple weeks in January here. But beyond that, we think there's still a good chance inflation might run hot for January, February, March until some of these supply chain issues finish off. So I wonder if this is almost a little bit of a signal that Nancy Pelosi and presumably her husband, who do a lot of these trades, are thinking that maybe we'll be in an optimistic environment for inflation by the second half of 2022. And that's why they're going heavy on tech here. So take a look at Google. I'll also show you what the charts look like on the day they purchased these, and we'll talk historic volatility a little bit. So I'm going to show you first what they are. So we've got Google, September 16th, 2022, 10 call options with a strike price of $2,000. Now, it's worth noting that $2,000 is about $900 in the money, folks. Let's go ahead and take a peek. If we were to go grab those Google shares right now, those Google shares for September of 2022, there we go, Sept 16th, we went all the way down to 2,000. We would pay a $959 premium for those. What's really interesting, though, about in-the-money call options like this is the stock's at $29.20. That means your break even for these is only $29.59, which really means if you were to execute these today, you're only paying somewhere around $40 in extrinsic value, and the rest is intrinsic value. These deep in-the-money call options, these are something that I've been taking advantage of as well. And in my opinion, they're much more insulating than the at-the-money or out-of-the-money options. Keep in mind, your theta decay is also going to be lower when you are deep in the money as opposed to at the money, and then also really far out of the money, but then that has other risks as well. That has substantial pricing risks. Next transaction, we have Micron, 100 call options of Micron at a strike price of $50. These Micron shares are also set for September 16th, also extremely deep in the money here. This is a stock that ran on the 21st with better outlook and better guidance, also in the tech sector, also in the chip sector. And folks, first a quick message from our sponsor. I'm really excited to tell you about today's sponsor, Moomoo. Moomoo is an app that helps you trade like a pro. It does this by offering powerful analytic tools, commission-free trades, and reliable order execution. Moomoo's technical analysis tools are really easy to use and super helpful, especially to retail investors like you and me. Many sites charge for the information that Moomoo offers totally for free. They offer things like daily short selling volume, financial statements conveniently available in the app, cost distribution data, and a community that talks about everything about finances and stocks. Right now, Moomoo's community is comprised of over 17 million traders. And since Moomoo offers commission-free trades, there really isn't a reason not to use them. The best part is, if you click the link in the description down below, you will get a chance to earn up to 5 free stocks worth anywhere between $3 to $3,500 when you open your account and deposit money. Terms and conditions apply. Thanks Moomoo for sponsoring this video. Check out that link down below and get your up to 5 free stocks. These Micron shares are also set for September 16th, also extremely deep in the money here. This is a stock that ran on the 21st with better outlook and better guidance, also in the tech sector, also in the chip sector. And folks, $50, pretty deep in the money again. Just a quick reference, looking again here, and we'll look at volatility in just a moment. I'll show you that as well. But if we go to $50, you're basically only paying about 80 cents for that option in extrinsic value. Not bad. That's something that I would consider as well. If you're looking for those longer options, go deep in the money. It's pretty juicy right now. Look for those where you're paying little to no X. Now this right here, Reof, this is some sort of real estate LLC for, looks like some kind of hotels in Fairfax, Virginia, San Antonio, and Baltimore. So not a public entity here. Roblox, 100 call options at $100. Now this one was interesting because Roblox is actually trading at $98. So this one's exceptionally bullish on Roblox at $100. However, it is also, they're also giving themselves about another 5 months on this one. This one goes out to January 2020. And it's about a $250,000 to $500,000 trade, which is about the same as the Micron trade. The Google trade was about twice as large, somewhere between $500,000 and $1 million. Then we got a Salesforce transaction here. Salesforce coming in the money with a call option also for January 2023. We've got a $210 strike here for Salesforce compared to $255 of where the market is right now. And we've got two transactions for Salesforce, also quite bullish. Salesforce and Google, the most bullish based on the purchase amounts here. And then we've got in the money $130 call options for Walt Disney, again for September 16th. So really looking at that second half to beginning of 2023 for these tech stocks mostly, plus Disney, which to some degree is also now becoming a tech stock. So I would call this very, very bullish on the second half. Let's go ahead and take a look at where some of these purchases were made, and then let's talk about historic volatility. Remember, if any of the terms here are confusing or whatever, I teach all of this in the Stocks and Psychology Money group down below. Okay, so take a look at this. These are some of the purchase dates. What I did is I just marked with a red arrow where the purchases were made. So Disney was made here, not particularly at any kind of bottom. We've had plenty of opportunities to buy Tesla at about this level here. We are a little bit above this now. I'd say this is about $150, about where this purchase went through. Salesforce, roughly at a similar spot to where we are now. Roblox is actually slightly lower to where we are now, so probably wasn't at the money call option when it was made or executed. Let's see here. Then we've got Google, roughly about the same spot as to where we are now, so nothing special here at Google. Micron was actually, these options were purchased the day of the positive outlook. So they reported in the morning before options opened. So they would have bought after this surge. They could end up buying the top on this. And they bought these when volatility was definitely at a peak. So let's talk briefly about volatility. Remember, folks, when it comes to options, get this, you want to buy low, sell high. Okay, so volatility is really, really important because you can get crushed with volatility. Just as a quick example, if you look at a volatility chart, which you could look at, let's say like Alpha Query or whatever to try to find this, you could find these sorts of charts yourself. But what's important is when, let's say you have volatility that's really high, like, oh, Micron just reported earnings. Usually volatility peaks, which means you end up paying peak pricing for call options. So this is usually the worst time up here to buy. And this is where they did end up buying. So I don't think they're actually watching the volatility charts here because I don't think they would have bought otherwise there. But volatility has kind of been doing this on Micron. Now, in fairness, the stock price has gone up more to offset that. We're still up about $4, maybe about 5% from this moment here. So it's not only volatility that matters. As long as the price of Micron keeps going up, might be able to avoid that volatility crush. Volatility crush happens when volatility all of a sudden plummets and people pay a whole lot less of a premium for your call options. And then all of a sudden you could be like, what? Why is my option all of a sudden down 5%? The stock didn't move at all today. Could be volatility crush. So that's why usually you want to sell at the top and buy at the bottom on volatility. Just as an example, I bought call options on Google in February of 2021 this year, and volatility was at the bottom of the year. And while Google's price did go up, that volatility boost really juiced the returns on those options because volatility went up which was great. It was kind of like having wind at your back in addition to price movement. Anyway, Disney right now is sitting at a pretty low level of volatility, so I'd say pretty decent for buying, somewhere close to its average. 100-day average is about 25. Right now sitting about 21 for volatility. Pretty decent. It is a lower vol stock. Salesforce is sitting at about 22 right now compared to 33 on a 100-day or 48 on a 30-day. It might go lower, but not terrible either for some of these in the monies. Roblox has a 67 volatility on the 100-day average, or the 100-day average rather is 88. It's at 67 right now. So elevated after this IPO, but still lower than where it has been. MU really peaked when these were bought. But again, the price has gone up since then, so it could be okay. Unless this really crushes back down. I probably wouldn't buy them on MU right now. I'd wait for a little bit of either a volatility pullback or a price pullback. Be a little patient on that. Google, pretty stable. We're sitting at about 16.9. The range has been between 16.9 to 22 over the last 100 days. So over the last 100 days, we're at the bottom of volatility for Google. Though in February, we were down to like 7. We were down half the volatility we had now. But the good news about this Nancy Pelosi trading here is really, it seems bullish on the second half, which is kind of exciting. More expirations really right before the winter of 2022, which is interesting. And it's heavy on tech. So not likely betting or making a bet here that inflation will end up lasting. Seems like more of an inflation is transitory style of bet, which is kind of a Democratic argument right now that inflation is transitory. You do see that a lot more amongst Democrats than you do amongst Republicans. That, of course, though, could be politically influenced. The Democrats are incentivized to say inflation is transitory because that helps them pass more money spending programs. Republicans are incentivized to say that inflation is not transitory because that helps them block money spending programs. So the truth, as usual, probably somewhere in the middle. All right, folks, thank you so much for watching this video. Hopefully this was insightful to you. If it was, consider sharing. And folks, we'll see you in the next one. Thanks so much. Goodbye.